Tuesday, May the 9th. And this is your Premier Pass. On Tuesdays, we're joined by our good friend and tax strategist, Dwight Dye, for Tax Tip Tuesday. Super excited. It is Tax Tips Tuesday. Dwight, welcome back.
Thank you. Thank you, Shannon.
Glad to have you here. We're going to get into the quadrant that we referenced on the show last week. And so I think basically, Dwight, a good way to break that down would be to take a couple of squares of that quadrant and kind of look at those as a group. And then in the next show, we'll look at the other two quadrants. So if you got familiar with the quadrant, and I can't remember exactly what you called it. What did you call it?
It's the cash flow quadrant.
The cash flow quadrant. Okay, so if you didn't get familiar with that from the last show, go back and take a look at it. And the cash flow quadrant is a way for you to visually be able to see where it is we want to try to get you from a tax posture to take the most advantage of the tax code. So Dwight, recap for everybody what the tax quadrant, or what the quadrant is, and then get into the first two, and we'll kind of go from there for today's show.
Okay, so the quadrant has on the upper left-hand side, this is your W-2 employee.
Okay.
Below that is your self-employed, so a small business owner paying self-employment tax. On the right side is your big business owner, an S Corp, a C Corp, and below them is an investor. It could be stocks, it could be real estate. For our purposes, we're going to talk about real estate.
Yep, we're going to focus on the real estate piece of it. So that's the quadrant, and the goal is to get to that fourth, that last investor grade quadrant. That area is where it's the most advantageous from a tax perspective. Okay, so let's start out and get a little bit more into the left side of the quadrant, because I think a lot of people that aren't either entrepreneurs or investors originally, maybe they start as a teacher or a police officer or something along those lines. They kind of start out over here in this side, and we want to move them. So for those people that are in those first two blocks, let's talk about those for just a minute.
Okay. So with your W-2 employee, you get a W-2 from your employer, you go file your taxes. It is what it is. You have your wages and then what was withheld in taxes.
Yeah.
So it is what it is. There's really no deductions that way. My mom was a retired school teacher, but she always had a side hustle. She was an entrepreneur. So along the way, she owned several businesses. And the point of that was because now she has some deductions to help offset some income. So I encourage anybody with a W-2 to start a side hustle. You mentioned firefighters, police officers, I think the last time we spoke. And those, with the way their shifts work, they have several days off in between their next shift. And a lot of those people have side hustles, whether it be in construction or lawn care.
A lot of them sell real estate.
Some of them sell real estate. So there's always a side hustle that you can then use some of your expenses to help offset that income.
Gotcha.
And then with that side hustle, then that's going to move you down to the self-employment
All
side.
right. So
we're on our path.
As we're headed down and we go from W-2, we get down to that second block. Now, there's a difference between that block and big business block. So let's focus on that for a minute, because just because you have an LLC doesn't mean you're quite there in the big business block yet. You're in a different category, but not quite in the big business. You're more in a small business category.
Correct. Self-employed, you're paying self-employment tax. You are a smaller business at that point. So until you kind of reach the 50,000, 75,000 mark in net profit, you want to stay in that block, because to go to the other big business block, it's not going to be advantageous from a tax saving standpoint, and it gets more complicated. So a lot of times you end up spending more money just to stay in compliance with that big business tax return, the bookkeeping that comes with it. So just stay at that self-employment spot until you're able to go across the quadrant to the big business.
Gotcha. So key for today's show is, if you're in that first initial block, you're going to be paying the most taxes with the least ability to offset that tax burden. That's going to be your W-2 wage earner. And then you want to move down, get a side hustle, or somehow figure out a way to get some self-employed income coming in so you can take advantage of those deductions. but you want to stay there until you've gotten to about $50,000 to $75,000 a year in income from that activity. Sound right?
Excellent summary.
All right, very good. Now, if you're in that first quadrant and you want to figure out how to get to that second quadrant or why we want to get to that second quadrant, just stay tuned. Next Tuesday, we're going to get into the other half of that quadrant and help you get a little further down the road. Thanks, Dwight.
Thanks, Shannon.